What is up, everybody? Welcome back to the Crypto Sharpest Show, where I cover the latest cryptocurrency news articles to keep you informed on what's going on in the crypto space. That is like my header starter question. I really could never think of anything more smooth line to say that for what this channel actually does. Just reading the news articles for you, because this is how I stay informed, and I'm just sharing the knowledge with you. But welcome back to the show, and yes, as the title said, I love technology, and that's going to be one of our first articles covering, because I always love like when new toys, gadgets come out, whether it be like automatic remote control roller skates to a flamethrower from the Boring Company. I just love new toys out there. And when it's blending into crypto, I like seeing the news about it. So I want to start off with this news article before we start talking about the New Hampshire bonds, OCC allowing banks to cover the fees for blockchain and all that stuff. But I wanted at least a fun article to start us off, talking about this new crypto wallet that scans your blood vessels in your finger to unlock the wallet. No need for a password, and also, yeah, touchscreen with it. So I don't know if I want to actually buy this just to see it. I still like my other crypto wallets out there, Exodus, Trezor, and all that stuff. But like this one just might be fun to play with and just see like how the technology evolves. But yeah, so this new Bitcoin crypto wallet scans your blood vessels and needs 0 passwords. And it is called the GNOT Relay, or the GNOT. It relies on finger vein scanning technology, and its creators say it's safer and easier use than established hardware wallets out there. And here's what it looks like, just like a little circle oval. I think you stick your finger in there. But if you are a crypto holder seduced by sleek design and anxious about violent kidnapping in your near future, fret not, you may have just found the top item for your holiday wish list. Now, the new company is aiming to disrupt the relatively cornered crypto hardware wallet market with a product it says is far more secure, easier to use, and pleasing on the eyes than its entrenched competition. Enter the GNOT. Now, it was produced by a team with ties to an established Korean biometric security firm. The GNOT is a gleaming puck-shaped wallet with a touchscreen face, which goes up for pre-sale today. It is all about its signature finger vein scanner. So here's like the other side of it. So you're just plop your finger in there as it scans. Now, it's a smooth indent on the puck that scans the rhythm of your blood flow and vascular architecture of your finger to establish a unique signature and unlock the wallet in a local process, powered by zero-knowledge proofs. Now, a user then need only input a 2-factor authentication code to unlock a GNOT smartphone app containing their various crypto wallets. Now, the GNOT supports most leading cryptocurrencies, including Bitcoin, Ethereum, Solana, Binance, and XRP. Now, the GNOT finger vein scanning technology requires no pesky PIN codes, seed phrases, or private keys for sign-in. Well, I don't really like that option, but I do like the tech. So again, I won't rely on this as holding my main vault for crypto, but it'd be a fun thing just to play with, because no seed phrase, private key. The whole thing about crypto is not your keys, not your coins. So how is this really monitored? That's my always mentality, unless it's your fingerprint, which is your seed phrase. So interesting. But this tech is also much more sophisticated than other biometric security options on the market, like fingerprint and iris scans, its creator says. Now, they said, what we're doing is we're eliminating that single point of failure of a seed phrase, Wes Kaplan, GNOT CEO, which told Decrypt during a recent interview in Manhattan. Now, what we provide is modern, friendly user experience that makes your finger the key to unlock your digital assets. And here's like an example showing it. So you got the puck, his finger's in there, it's scanning it. So before you ask, the GNOT requires live blood flow to unlock, so the product's launch shouldn't unleash a wave of finger amputations across Western Europe. Now, every finger in the world has its own distinct finger vein signature, which stays same for life. So no threats from long-lost identical twins either. So yeah, I guess they put that in there where it does require a blood flow to go through your finger. So in case like you're starting to hear like these wrench attacks out there and people are chopping off fingers, they will not be able to get in this wallet, because it does require that active blood flow into it. Now, what's more is the company is currently developing a multi-sig functionality for the GNOT, meaning that the wallet will soon be able to offer an additional layer of security, one that only unlocks if multiple users from different points on the globe sign into their own GNOT simultaneously. Now, the patented finger vein scanner powering the GNOT is already on the market. It is currently being used for security at, among other places, in the Geneva headquarters of the International Telecommunications Union, the UN Specialized Agency for Digital Technology, but the technology has never before been applied to crypto. Kaplan thinks that the tie-in is natural, and that demand for the GNOT will be high given the recent spate of high-profile kidnappings that have plagued crypto users across the world. And here you can see the most common cryptos on there: Solana, XRP, Binance. They even had Ethereum and Binance on there. But even so, the CEO said he hopes that the product will redefine how users engage with hardware wallets by reliving safety fears and making cold crypto storage as simple as any other smartphone app. Now, security should be an afterthought, Kaplan said. You should be able to enjoy the user experience rather than worrying if you're going to lose this code. Today, GNOT will open a pre-sale for its Founders Edition aluminum-shelled wallet, which will retail for $299. Now, the company is starting with a batch of 10,000 units, which are expected to ship in early January. Now, that price point puts the GNOT slightly above Ledger's new $179 style Focus Nano Gen 5 hardware wallet. I think that's that new touchscreen one they have. The only problem I have with that Ledger one is it's very dim. So if you want a brighter screen, maybe look for another wallet. But that's really, I think, my only negative to the new Ledger Nano Gen 5. And then it's also comparative to even the Trezor 249 Quantum Ready Safe 7 model. Is that the new touchscreen one too? I still haven't seen that in picture. I know Trezor's like current models out there like are very tiny to push the buttons. Like I have the older model, the touchscreen one, plus their original one. But it's like most people have problems like typing that code. So I know they created a new wallet. I'm not sure if it's that Safe 7 model, but I think they made the screen just a little bit bigger, and I haven't had my hands on it or really had a chance to take a look at it to see if it's much bigger and much easier to see to have that touch screen. So I'll give you a thought on that whenever I do touch it. But I still do like Trezor devices over Ledger. But the company is still betting that a promise of less stress when it comes to both security and hardware hassle is going to resonate particularly strong with crypto users this year. So yeah, so they're still bullish on the crypto market right now because everyone's just kind of fearful. Bitcoin just went under 90,000 again, even though we touched 94 yesterday. But let me know, would you try this new wallet out? Or would you follow like me, like this? You want to play with it, but you don't want to really like make this your vault wallet? Because I just like new toys when they come out. It's like I want to play with it. I want to see, like, even back as a kid when the remote control cars and you had like the laser gun tag systems. Like I just love toys and tech when they come out. So who knows? I might get this guy just to have fun with it, unless you know an honest opinion on it. See if it's easy to use, if there's any hard access to it. But yeah, maybe I'll get in on that pre-sale. There's only 10,000 units. So, But yeah, so that's a nice little first article just to start off the show with. It's just fun just reading those. Let's go over some Twitter posts right now. Nothing to really make the big time news. Like there are articles out there, but I just didn't really want to put them in the show. But let's see. This latest one from Cointelegraph was the U.S. won't start buying Bitcoin for a strategic reserve until other countries lead the way, says Mike Alfred. So again, we're all waiting for the strategic reserve that the U.S. created and implemented, or not implemented, but they created. But it's kind of so far we're just putting in what like we've confiscated or seized Bitcoin. And so what he's saying is like we're going to wait till other countries start to do it so first, which is, I don't know, if that does happen, then that's when we do hit that point where it's like, I don't want to be trading Bitcoin like back and forth. Like we're just at 94, you sold up there, then you going to buy back now since it's under 90 because now you have more Bitcoin. It's like, I'm just always worried that we're going to hit that point. Like all these big guys keep saying, it's like, we are not ready for how big Bitcoin could move. And again, with everything going on around the world, it's like, I still believe that. So again, like I'm just hodling, keep stacking, don't want to trade back and forth just in case there is that time where it's just like, so hard to get. But that's what Mike Alfred is saying. And then what else? We got some Jim Cramer posts going on out there saying that he feels like a cabal is trying to keep Bitcoin above 90,000. Here was his actual tweet. Almost feels like cabal is trying to keep Bitcoin above 90,000. I like Bitcoin, but I do not like any of the derivatives created to play it or game it or mine it. So it's just kind of bullish news because usually we have the Jim Cramer effect. When he says something, like it always does the opposite. So I don't know if this is him being bearish or bullish. So how's the price going to react? Also from Bitcoin Treasuries Net, just in, the world's most profitable hedge fund, Renaissance Technologies, just disclosed it holds 225,730 shares of MicroStrategy. So, man, one of these days, MicroStrategy is going to have his own bank out there, like, because his company holds like what, 6,000? He just added some more in there. So let's see, Michael Saylor. Let's take a look. I know we just got word he purchased like an extra 8,000 on Monday. So how much did he actually? How much does he have? There's always some post disclosing like his holdings. So there's Saylor. Come on, let's see. Let's go to his actual account and see what he's been posting. I know he always shows how much strategy is sharing. Yeah, he's been on the news. So here we go. Yeah, so they acquired the 8,000 on Monday, which now puts them holding 649,870 Bitcoin. Like, this man is definitely going to come out with his own Bitcoin bank, but he's not first, because here at the Crypto Club, or not the Crypto Club, but side venture that Bitcoin Ben's doing, we started Private Key Capital, the first ever Bitcoin-backed credit union. And we have done transactions from DC to El Salvador, making the first overseas separate countries like transaction. So this man's definitely going to be creating a bank as well, revolving around Bitcoin. But I think that is it for the Twitter news. Oh wait, I got one more thing. Breaking news: Saudi Arabia just announced they will start mining Bitcoin, and the Middle East is coming. So that's huge. My buddy's texting me going, "Oh, like Saudi Arabia just met with Tesla. Like, oh man, if they just put in 1 trillion." What is he texting me? I guess these are the conversations me and my buddy have. He's always going negative on the Bitcoin, like, "Oh, you should have sold it here and then bought back in. Now you got more Bitcoin." And he still doesn't believe that Bitcoin actually has any value. It's like, there's no use case. There's nothing to it. So I just stopped arguing with him on that aspect. We've been dealing with it for 5 years. It was fun back and forth, but eventually it just turned into, when you just can't convince somebody, it's just like the easiest thing to do is just agree with them, move on, don't let it affect friendships, family, or whatever. Just go, Eventually they will come around to it. Like, he understands, like, Bitcoin is like really the only option out there, like compared to all the other altcoins, all scams. It's like, oh, that's gambling. You shouldn't be doing that. But he's saying, yeah, if Saudis invest 1 trillion in Tesla alone, the price would go to 705. If Saudis invest $500 billion in Tesla alone, the price would go to 555. So he's all in on Tesla. He's going back and forth with the US dollar. That's how he's increasing it. But what I'm saying, that's what he's saying. What I'm seeing is they're going to go into Bitcoin mining, securing, and making Bitcoin even stronger. So awesome. All right, now let's talk about the Bitcoin bill that you're seeing and hearing about all the time. So yeah, the new Bitcoin crypto, wait, we already covered that one, my bad. But New Hampshire approves first of its kind $100 million Bitcoin-backed municipal bond. So what does this mean? Well, New Hampshire has approved a $100 million Bitcoin-backed municipal conduit bond, letting borrowers raise capital against over-collateralized Bitcoin. So New Hampshire has approved the issuance of a $100 million municipal bond backed by Bitcoin in what appears to be the first structure of its kind at the U.S. state level. Now, minutes from November 17th's meeting of the New Hampshire Business Finance Authority, the state's business financing agency shows the board planned to consider approving a resolution authorizing up to $100 million bonds for a project to acquire and hold digital currency. Now, minutes from the following day record that the directors voted to approve the preliminary official intent with no reservation to issue a taxable conduit revenue bond for Wave Rose Depositor LLC of up to $100 million. Now, according to a Wednesday Crypto in America report, the bond is backed by Bitcoin and will let companies borrow against over-collateralized Bitcoin held by private custodians. Now, the state or taxpayers do not back the bond. Instead, the BFA approves and oversees a private deal. Now, while Bitcoin, reportedly held in custody by BitGo, covers the investors. Now, according to the report, asset managers, Wave Digital Asset and Bond Specialist, Rosemar Management, designed the bond to utilize Bitcoin as a collateral under the same rules that govern municipal and corporate bonds, and Wave co-founder Les Borsai, and said the goal is to bridge traditional fixed income with digital assets for institutional investors. Now, he said, we believe the structure shows how public and private sectors can collaborate to responsibly unlock the value of digital assets and digital asset reserves, he added. Now, the borrower is expected to post approximately 160% of the bond's value in Bitcoin as collateral, and if the price of BTC drops below roughly 130%, a liquidation would ensure that the bondholders stay whole, according to BFA Executive Director James Key Wallace. Now, fees from the transaction will fund the local innovation and entrepreneurship program and the Bitcoin Economic Development Fund. Now, New Hampshire dives headfirst into crypto. The news follows New Hampshire becoming the first U.S. state to allow its government to invest in cryptocurrencies in May, after Governor Kelly Ayotte signed a bill allowing the municipality to invest in cryptocurrencies and precious metals. Now, New Hampshire is also working on a bill to deregulate local cryptocurrency mining operations. In late October, a committee voted a 4-2 vote to send the measure for further review in an interim study after it had been deadlocked in the state Senate twice. Now, the local administration is viewed as particularly welcoming the cryptocurrency industry. In February, Brendan Cochran, an anti-money laundering specialist in YK Law in New York City, argued that it could become an alternative for crypto companies relocating to the Bahamas. Now, the latest moves build on a longer history of crypto engagement. Back in 2015, the New Hampshire was already working on a bill that would have allowed the state government to accept tax and fee payments in Bitcoin. Now, the bill ultimately failed in 2016, but it does show how early the local administration began to show interest in this asset class. And additionally, as early as 2016, some advocates were already arguing that the New Hampshire was among the world's most Bitcoin-friendly communities. So what does this really mean, though? Yeah, so it just means we're going to get a Bitcoin-backed bond, which is the first of its kind. And so, they're going to carry a bond, 100 million. They need to have at least 160% in Bitcoin. And if it ever does dip, goes beneath 130, they liquidate it. And now the bondholders are still safe and good. So, I'm looking forward to seeing how this plays out. And as long as Bitcoin goes up, then this bond will do very, very well. Now, what else is happening up in the state government? Is this the state government? Is this the United States? Probably. But the other news going on around the world, not around the world, I'm not even saying. Let's continue on with the news about what's going on within the United States, like how crypto is changing and what changes are being made. And right now, the OCC confirms banks' authority to hold crypto to pay digital asset network fees. So the Office of the Comptroller of the Currency issued new policy guidance on Tuesday confirming that banks can hold cryptocurrencies to pay fees on the blockchain network. Now, the U.S. banking regulator also maintained that the network fees are incurred to facilitate permissible activities. So the OCC said in an interpretive letter that a national bank may hold digital assets as a principal necessary for testing permissible crypto assets related to platforms, according to a report that the initiative can either be internally developed or acquired from a third party. Now, OCC allows banks to use digital assets to test crypto-related platforms. And here is the tweet by them saying the OCC confirmed permissible banks, and you can even read the full article about it or their plans right here. You can go on their Twitter, OCC, or at USOCC. You would click on the link in there, and it'll take you to the full page of them confirm what they said. But similar to the blockchain networks, banks will also need to have specific tokens on their balance sheets to use as a fee for transactions. The interpretive letter number 1186 detailed that activities allowed under the Guiding and Establishing National Innovation for U.S. Stablecoins Act will require banks to pay network fees as an agent for the customer or as part of their custody operations. Now, Adam Cohen, the OCC's senior deputy comptroller, chief counsel, argued that the initiative enables a national bank to expand its pre-existing permissible activities. He also acknowledged that the bank won't have to depend on operational risks associated with acquiring digital assets from a third party. Now, here's what exactly he said. Permitting the bank to engage in the proposed activities enables it merely to expand pre-existing permissible activity without having to expend resources or expose itself to operational and counterparty risks associated with acquiring the necessary crypto assets from a third party. Now, Adam Cohen, senior deputy comptroller and chief counsel at OCC, said, now, the banking regulator took a more cautious approach to crypto during the Biden administration, and the OCC required financial institutions to receive approval from the agency before engaging in the most digital asset-related activities. Now, under the Biden administration, other banking regulators, including the FDIC, have prevented financial institutions from participating in crypto-related activities. Now, the agency cited crypto assets as too risky, including engagement with permissionless blockchain networks like Ethereum, and the public on which activities can be censored by human administrators. Now, the recent pro-crypto Trump administration, though, has caused a tidal shift in the crypto industry. This year, by dismantling such policies, the OCC reversed Biden's previous policy in March, which required national banks to gain regulatory approval before engaging in crypto activity. Now, the agency under Trump appointee Jonathan Good has also allowed financial institutions to custody digital assets for their customers and engage in stablecoin-related activities. Now, other U.S. banking regulators, including the Federal Reserve and the Federal Deposit Insurance Corp, as well as broader Treasury Department, revealed initiatives to write new regulations governing stablecoin issuers and activity. Now, the new regulations will be based on the recently established Genius Act requirements, and however, those rules haven't yet been set in place for approval yet. Now, crypto firms file for a national trust bank charter, so a lot of crypto firms, businesses are trying to get this qualification. But apart from the national bank, the digital asset exchange platform, Crypto.com, applied to the OCC in late October for a national trust bank charter. The firm said the initiative aims to expand its federally supervised crypto custody services for institutions. Now, the crypto firm stated that the filing is part of its regulated security-first approach for large customers, including ETF sponsors, corporates, and advisors. The OCC regards a national trust bank as a limited-purpose national bank that it supervises for trust company powers. Now, Crypto.com's co-founder and CEO Chris Marszalek acknowledged that building the product and service portfolio through regulated and secure offerings has been the firm's focus since its launch. And according to the OCC's digital asset licensing portal, Coinbase also filed in October to establish a Coinbase National Trust Company, headquartered in New York. Now, USDC issue Circle also filed in late June the launch of its first national digital currency bank, NA, to bring its stablecoin reserves oversight and institutional custody under an OCC charter. So we got firms filing for this to just abide by the rules and everything, but so it's just we're getting more progression forward for like how banks are going to play and rules are going to get put in place. But no, this is still bullish news to just see how the world is changing, because like how the article was acknowledging like the past presidential presidency, the Biden era, like had strict rules on what banks could do. Now with Trump, like we had just a tidal wave of shifts going on. So that's where we're getting all these news about banks, institutions, countries on board now, because the times have changed. So again, like my previous article or videos I said were always talking about, what was it? Like I'm not fierce with the bear market right now because again, times are changing. Like I just know where this adoption is going. Sure, we will experience price dips, but like in the long run, I know we're just expecting for greatness to come. So that is what news is that? Very standard news for institutions, banks allowing authority for cryptos to pay for digital asset fees out there. So you now start testing like products, maybe DAOs, exchanges, tokenization, whatever they're doing. Now they have the authority to hold some crypto assets to be able to cover those fees, because everything you do on crypto has the fee attached to it. It's on the blockchain. So when you send Bitcoin, you need Bitcoin to be the gas fee to have it sent over. When you're dealing with Ethereum, you need Ethereum in your wallet to move it. If you're on Solana, you need Solana. So again, they're going to need to have these digital assets to be able to cover these network fees out there. But so let's take a quick commercial break really fast so I can sip my coffee, smoke my vape, and we'll be right back after these messages.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine? Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.
And we are back. So yes, if you guys want more information about the club programs and everything, go to bitcoinben.io or give us a call or text at 941-413-8080. And take advantage of all these programs we have to offer. We got new pricing with the club and everything. So if you just if you don't want to go to the club and be a classic member, we now have the programs membership for you to gain access to it. And that's just $5 for the month to gain access. So much cheaper now to be a part of all these programs. Non-confidential Bitcoin purchases, loans for Bitcoin. Even if you're a beef person and want clean beef, you have a beef program too to get you some clean beef yearly at a bulk purchase. So yeah, definitely check us out down there. And let's continue on with the news. What's just happening right now? From Private Key Capital Credit Union's Twitter account. Yes, we do have one over there, so give them a follow. But it looks like they're congratulating Donald Trump, Nayib Bukele, Milena on a new chapter between the U.S. and El Salvador. So here's Milena's portraying. Here's President Bukele called me to serve and help him write a new chapter for Salvadorians in the U.S. So partnerships are coming, guys, around the world. This new reciprocal trade agreement between El Salvador and the United States marks a new level of partnership, friendship, and proof with our most important ally. We're going to get preferential access to the world's largest market, zero tariffs for several Salvadorian products, no trade barriers and investment promotions, fostering digital commerce, promoting economic, labor, and environmental cooperations, positioning us among select strategic, and what else is that, as well as recognition of the committee made and El Salvador economic transition. Now, this further supports for the excellent result of President Nayib Bukele's administration and the participation in Global Entry Program, having a level 1 travel recommendation for U.S. citizens visiting our country, and much more. We will never stop fighting until we have the prosperous, free, and modern nation President Bukele promised. And yeah, so number 1 destination, I think we have our resort coming soon, like very, very soon, like probably within like a month. Like it is happening where you can take reservations. And hey, there's our CEO, Jay Bose. Congratulations, Ambassador Moraga and team. You are forging a pathway for U.S. investors to bring capital, both monetary and human capital, into El Salvador. Your leadership and presence in the U.S. is both essential and appreciated. And I believe she was there when we were down in D.C. Bitcoin Ben was there, Jay was there, and I believe even her, as they were doing the first Bitcoin transaction from D.C., I think using our Private Key Capital's network too for that. So it went from that wallet over to theirs, and it worked smoothly. So congratulations, El Salvador, on all this. Now let's continue with the news. What else is going on in the crypto space? It looks like Ondo wins Liechtenstein's approval to offer tokenized stocks in Europe. So U.S. tokenization platform Ondo is preparing to offer tokenized stocks and ETFs in 30 European countries after receiving approval in Liechtenstein. So Ondo's Global Markets, a US-based tokenization platform, has received regulatory approval to offer tokenized stocks to European investors. Now, Liechtenstein Financial Market Authority, or the FMA, has granted Ondo approval to launch its tokenized stocks and exchange-traded funds, now in the European Union and the broader European Economic Area. Now, the company announced on Tuesday with this milestone, more than 500 million investors in 30 European countries can soon access regulated exposure to U.S. markets directly on-chain, Ondo said. Now, the news came a few weeks after Ondo partnered with Börse Stuttgart Group, digital asset arm at BX Digital, to enable the tokenized stock trading in Switzerland on November 3rd. Now, Liechtenstein adopts MiCA despite not being an EU member state. So Liechtenstein approval positions Ondo to offer its tokenized stocks and ETFs to retail investors across all 30 EEA countries, including all 27 EU nations, plus Iceland, Liechtenstein, and Norway. Now, the regulatory milestone positions Ondo to operate within a unified regulated European framework consistent with established investor protection standards, the company said. And here is their tweet on a big win for tokenization. Soon, millions across the EU will be able to access tokenized stocks and ETFs within a regulated framework. So Ondo did not specify the framework under which it secured approval to offer the tokenized stocks in Europe, but it did highlight Liechtenstein's passporting regime, which extends across the EEA. Now, as an EEA member state, Liechtenstein implemented the EU-wide Markets and Crypto Assets framework through the EEA MiCA Implementation Act. And yeah, so that was a lot of words, the MiCA, Markets and Crypto Assets. And then we have the EEA, which was the, which even was that? The European something. But following the expiry of the transitional regime on December 31st, 2025, crypto asset service providers, the CAPs, must hold MiC authorization from Liechtenstein's FMA. Now, Cointelegraph approached Ondo and the FMA for a comment regarding the nature of the approval, but had not received a response at the time of publication. Now, the news arrives amid rising tensions within the EU over the extent of supervisory authority that member states should retain under the MICA, according to reports. And the EU officials are drafting plans to designate the European Securities Markets Authority as the direct regulator for all CASPs across the bloc. So way to go, Ondo Finance. Where are you at price-wise? Let's take a look. Let's see. Ondo, is this like bullish news? Are you guys going up? Would we see you on crypto bubbles? Oh, totally didn't even type it. So Ondo, there we go. Number 47 on market. You're down 6%. 5. That's the 24-hour chart. But where are you at? No, you just still been on a down. Yeah, all coins, guys. They still have potential to dip 90%. So always be careful on all that stuff. But it looks like this news didn't trigger anything going on. So, or maybe it's just a delay reaction. But again, Bitcoin's kind of dipping right now at 89. But hey, this is bullish news for Ondo. But again, maybe we just need to wait a couple of days to see if people will flow in because of this. So yeah, but that is Ondo news. So congratulations on the win out there to be off to offer these tokenized stocks and ETFs to the European countries or European citizens, people. Yeah. So that is our Ondo news. Now let's talk about HSBC to bring tokenized deposits to the US and the UAE. A stablecoin race heats up. So everybody's getting in on tokenization. Like, again, like this isn't like really a flashy news, like day for you, but again, this is just showing you like what's taking place around the world. And when people say like Bitcoin and blockchain tech, it's like it's got no value, then why are all these guys adopting it or taking advantage of it? Tell me that if it has no value. So HSBC is the latest mega bank to double down on tokenized deposits versus stablecoins by preparing for new launches in the US and the UAE next year. So global megabank HSBC is doubling down on tokenization over stablecoins as global banks rush to keep pace in the stablecoin race. Now, HSBC Holdings will start offering tokenized deposits to its corporate clients in the US and the United Arab Emirates in its first half of 2026, according to a Bloomberg report on Tuesday. Now, the tokenized deposit service by HSBC enables clients to send money domestically and abroad in seconds around the clock, said Manish Kohli, HSBC's global head of payment solution. Now, the topic of tokenization, stablecoins, digital money, and digital currencies has obviously gathered so much momentum that we are making big bets in this space, said Kohli. Now, tokenized deposits versus stablecoins. So tokenized deposits are digital representations of bank deposits issued on a blockchain by regulated banks, allowing for instant 24/7 transfers and programmable payments. Kind of sounds like a CBDC, but I guess we're calling it tokenized deposits instead. But unlike stablecoins, which are often linked to fiat currencies like the US dollar and backed by assets like government debt, deposit tokens are created using the issuer's balance sheet. Now, while stablecoin issuers like Circle are not allowed to pay yields on stablecoin holdings by users, tokenized deposits offer interest payouts among their key features. So you have the stablecoin, here's like a little side-by-side. So issuers, licensed institutions, tokenized deposits, or commercial banks. The trust model is in stablecoins inherited from backing assets, while on the tokenized deposits, it's issuers' balance sheets backed by regulation. The backing model is on stablecoins is 100% backing in a mix of either deposits held at banks, high-quality liquid assets, low-risk or longer-dated assets, while the tokenized deposits are based off a fractional reserve banking model with capital and liquidation requirements, and then so on. But according to Kohli, HSBC plans to expand the use case of tokenized deposits in programmable payments and autonomous treasuries, or systems that deploy automation and AI to independently manage cash and liquidity risks. Now, nearly every large company that we have a conversation with, we are seeing a big theme around treasury transformation, the HSBC executive said. Now, the HSBC stablecoin launch is still not rolled out, so the product's expansion in the US and UAE is the latest by HSBC, following its debut of the offering in Hong Kong in May, and with Ant International becoming the first client to utilize the TDS solution. Now, the bank has since expanded the offering in multiple markets, including Singapore, United Kingdom, and Luxembourg. Now, here's a chart showing stablecoin payments, which is a $50 trillion future, size of stablecoin payments and addresses. And we've just, this is our prediction. So wow, by 2030, they're at the $50 trillion size. So that's only 4 years away. So that was a bold prediction there. Now, HSBC's choice to move forward with tokenized deposits come amid major banks like JP Morgan doubling down on the technology. Now, on November 12th, JP Morgan rolled out the JPM coin, a deposit token representing US dollar deposits at the bank. The company opposed the token to traditional stablecoins, with JP Morgan's blockchain executive, Naveen Malila, highlighting that deposit tokens operate within traditional banking frameworks. Now, about pushing tokenized deposits, HSBC does not rule out the potential issuance of a stablecoin. Now, it's something that we would continue to evaluate, Colley said, adding that there are a few things that still need to happen, which is the legal framework needs to be clearer. And that's what I'm always saying when we get rules about, like, the legal framework needs to be clearer. So, like, when we're getting news about, like, changes in policy, the Genius Act, or just this country's talking about that, it's just like when they're talking about policy changes, it's like they're waiting on it. People and companies have been waiting for so long because they couldn't do something if they didn't know if it was legal, illegal. It was basically a wild west in crypto and blockchain. So again, like, when I'm always so bullish when I see news about this little changes happening, like the approval to offer tokenized stocks, or I already deleted all the other news articles, or like what was the ones I was even covering today? I had the crypto wallet. Then I had we were talking about the New Hampshire bonds and everything like out there. It's like this is something completely new. So it's just like changes that are just happening with rules, and so it's always so bullish. So way to go, HSBC. We'll see how this tokenization for stablecoins come out. Like, which are they going to use? Stablecoins aren't ruled out, but I think they have more control when it comes to a tokenized deposit. So it's really kind of like CBDCs, because someone just asked the other day, like in our class, there's being stablecoins and CBDCs. CBDCs are controlled by the bank and the government, while stablecoins are controlled by private companies. So that's the difference between them. Basically the same thing, both completely centralized, where they have the ability to freeze wallets with their token in it if they want to. And they're only freezing their token, not the entire wallet. So say you did something illegal with Tether, they knew about it, and you had that Tether in a, let's just say, an Exodus wallet, and you had Bitcoin in there, all they can do is freeze the Tether side of it. They don't deactivate the entire wallet out there, just to point that out there so it doesn't confuse anybody. But yeah, so that's HSBC bringing tokenized deposits to the US and the UAE. Now let's talk about, or maybe we should be careful in Africa right now. Like, I'm not sure if we should be worried about this or not, but it looks like Kenya alerts there is a no license VASPS as Bitcoin ATMs pop up in malls. So we have some Bitcoin ATMs popping up in their area, but they're not licensed. So is this something you should be worried about? Can you trust this ATM out there? I don't know, but they are spreading the warning about that as these ATMs do pop up. But Kenya's recent implementation of a comprehensive crypto legislation marks a pivotal moment for the country's emerging digital economy. Despite government warnings that no licensed crypto providers are currently operating, several Bitcoin ATMs have surfaced in Nairobi's bustling shopping malls, signaling a burgeoning interest in cryptocurrencies among local consumers. Now, this development highlights the rapid pace of crypto's adoption, the juxtaposed with the regulatory uncertainty that continues to shape Kenya's crypto landscape. Now, here are some key points. Bitcoin ATMs appear in Nairobi malls shortly after Kenya's new crypto law took effect, despite lack of licensing. The Kenyan Government Virtual Asset Service Provider Act of 2025 aims to regulate the sector, but licensing procedures are pending. Authorities warn that currently no VAS, the Virtual Asset Service Provider, is authorized to operate legally in Kenya, and crypto activity is expanding in informal sectors and lower income neighborhoods, likely Kibera, where Bitcoin offers access to financial services. And lastly, regulatory ambiguity creates a challenging environment for the growth of crypto markets in Kenya. So it's like, yeah, there's no rules being played, or no rules have been approved to do it, but the citizens want to be a part of it. So it's coming up in some lower income neighborhoods out there. But Bitcoin ATMs have recently appeared across major shopping malls in Nairobi, shortly after Kenya again adopted its first comprehensive cryptocurrency law. Local media reports that machines branded bankless Bitcoin were installed next to traditional banking kiosks, providing cash to crypto services to Kenyan customers. Now, this isn't Kenya's first encounter with a Bitcoin ATM. Back in 2018, the East African news outlet reported that several machines by BitClub had briefly operated in Nairobi. Through adoption remained limited, and the devices did not become mainstream in the retail space. But current data from Coin ATM Radar, though, reveals only 2 Bitcoin ATMs in the entire country, underscoring how nascent the infrastructure remains. Nonetheless, the presence of these machines signals a notable shift as Kenya's governments push forward with new regulations. Now, just weeks after the Virtual Asset Service Provider Act of 2025 came into effect, Kenya introduced its first formal licensing framework for crypto platforms, including wallets, exchanges, and custodians. On November 4th, the Central Bank of Kenya and the Capital Markets Authority jointly announced that no entities have yet received licenses under these new regimes, and they warned businesses claiming that licensings are operating illegally, emphasizing the need for formal approval. Now, the Central Bank of Kenya warns that no VAS is licensed yet. So they just keep saying that it's like these ATMs aren't licensed, so I guess use them at your own risk. But the regulators clarified that although the law is now enforced, the licensing process has not yet been initiated, leaving current operations in a legal gray area. The CBK and CMA issued joint statements warning the public against engaging with the unlicensed VASPs. Now, currently, CBK and CMA have not licensed any VAS under the Act to operate in or from Kenya, and the statement read that the National Treasury is expected to develop regulations that will guide the licensing process once finalized. And there is that public notice out to citizens. Now, this regulatory disconnect creates a paradox. Physical infrastructures like Bitcoin ATMs are appearing in the market, while authorities caution the public about the lack of the licensing and legal safeguards. Now, critics argue that the dispensaries raises questions about the enforcement of crypto laws and the compliance of private crypto business operating within the country. So despite the regulatory ambiguity at the formal level, Kenya's crypto ecosystem is thriving on a grassroots level, and Bitcoin's presence in lower income districts like Liberia demonstrate its importance as a financial tool for those lacking access to traditional banking. And local entrepreneur Ronnie Midwadi emphasizes that Bitcoin proves financial freedom to its residents, allowing them to hold value without the elaborate paperwork, a crucial advantage for Kenyans living on near poverty levels. Now, this juxtaposition of increasing crypto infrastructure and ongoing regulatory uncertainty highlights the dynamic nature of Kenya's crypto markets as both regulators and consumers navigate an evolving landscape. So there you have it. So they're working on rules still and everything, but again, Bitcoin ATMs are popping up. People are getting the freedom to actually hold an asset that they can actually utilize because, again, they don't need the paper, they don't need their banks anymore like crypto and Bitcoin, or Bitcoin makes the bankless banked. Because again, we don't need the banks anymore to basically be our own bank. Because when you have your own self-custody crypto wallet, you have your seed phrase, you are your own bank now. You're responsible for the crypto you hold, but again, there's no more middleman looking over you saying you can't do it. So it does make sense that they're popping up in the lower income industries. But that is news from Kenya with their Bitcoin ATM. So again, I don't know if if you're in Africa, Kenya, and you want to use these ATMs, just they're unlicensed. I don't know if they're good, bad, or whatnot. Just we got to wait to see if something bad does come from this. Like, who knows? Could be an article could pop up saying, oh, these ATMs, the Bitcoin, is that actually what they're called, Bitcoin ATM? Or what we got news that these Bitcoin ATMs were involved in scams. Like whoever used them never received any Bitcoin. But as of right now, we haven't heard about that. So I'm seeing that that's probably not true if it hasn't happened yet. But yeah, so that's Kenya news for you. Now let's move on to our final news article of the afternoon for you guys. And this is an update to Tron's network. So the Tron update self-destruct with a TIP 6780 proposal. So if you guys hold Tron, you may want to pay attention to this because this could be some bullish news just on improvements to its token and network. So the TIP 6780 proposal raises the self-destruct energy cost to $5,000 to prevent misuse and accidental fund losses out there. So I guess this is more bullish for network development. But developers of Tron have proposed an update in the form of a TIP 6780, changing the working of OP code self-destruct on the blockchain. It would make Tron more consistent with Ethereum while still supporting all existing Ethereum tools and applications. Now, the self-destruct function allows a smart contract to permanently self-delete, clear its storage, and transfer its remaining assets. Now, under the new TIP 6780 proposal, the data of contract will be deleted only when the self-destruct function is invoked and within the same transaction that created the smart contract. So if the function is called later, the contract stops running, but its data remains accessible and assets can still be moved. Now, this helps prevent accidental loss of funds and misuse of the function. And here's a tweet announcing it. Now, the energy cost for executing self-destruct rose from 0 to 5,000. It doesn't say what that fee is. Is that the fee in Tron tokens? Maybe. But making it more expensive and less appealing to use unnecessarily. Now, old methods like using self-destruct to upgrade contracts or protect data won't work on this new approach. So analysis of 2025 data shows that there were 957,324 internal transactions, and almost all were created and destroyed in the same transaction. Once a contract self-destructs, it addresses never reused, meaning most current contracts won't affect the change. Now, the update will be released via a hard fork and will be activated by on-chain governance. Developers are encouraged to employ safer, more predictable designs for smart contracts, and this further improves security, making the construction of apps across Tron and Ethereum easier. Now, other updates from the Tron core devs. We got Tron's v4.81 update, which is underway. With testing in progress, the updates will be deployed to the Nile testnet first, then full release in about a month. Now, this is minimum memory requirements for full node setups having been increased from 9 gigabytes to 12 gigabytes for both x86 and ARM nodes, acquiring minimum hardware of 8 CPU cores and a 32 gigabyte RAM. Now, this change helps the network handle heavy loads and keeps everything running smoothly, even if some nodes go offline. Now, besides that, the team is improving Tron's HTTP APIs by switching to non-blocking systems for rate limits. This basically means that users won't be stuck in a wait when lots of requests roll in, and applications will keep working as usual. So in short, all these changes makes Tron safer, more developer-friendly, and closer to Ethereum, yet still retain reliability of the network for all. So there you have it. So a nice little improvement to the Tron's network and ecosystem. And that's a good time to end this new show because we are going on 46 minutes. Yeah, so it's a quite long show. We had tons of news to cover. Now let's take a look at our quick little fear and greed indexes to see how people are feeling. We were in extreme fear yesterday, I think at 15, and looks like we just bounced up just 1 point, so we are still in extreme fear. So again, always a great time to buy when streets are bloody red, because again, this could be your last chance to get 90. Sure, on Kalshi, people are still predicting a 30% chance we'll go down to 80,000, but a 30% vote, that's kind of telling me Bitcoin could continue going up. And again, there was an interview with Michael Saylor talking about, like, if you knew what I knew, like, you would not be selling your Bitcoin because they know something that we don't. Bitcoin's currently at $89,000, so we're having a little dip right now. Week-long chart. Last week we were above 100, so we could be coming soon. Like, if you look at the long run, I think, what were we looking at yesterday in our class? We were looking at, like, the rainbow chart. Yeah, so is this the all-time history? Or wait, what did I just click on? The log. What is this, from 2012 to 2024? So where we're at now, like, this kind of looks like a consolidation phase if you put this over the rainbow chart. So it's like, so we still have a nice little bull run? Because I don't think the bull run's over. I think this is just one of those little dips going. And then, whoa, sea of red right now. This is everywhere. If you're looking at the hour, the day, the week, the month, only the year gives you a little bit of green. But yeah, all coins are not doing too hot today. So just got to be patient and hold on to it, or maybe start considering a plan. I don't know. There are some people out there, traders or just investors. I know Ivan on Tech is always like preparing his guys, like, hey guys, when things are looking like this, like, we still, like, all coins can still go 90% down. So just be careful in the space, have a plan so you know what you're doing. But that's it for the crypto news, guys. Thank you everyone for being here. I will be back again tomorrow with more crypto news. I gotta dip out because I got some meetings coming up. So everyone, see ya, stay safe, hodl strong, and I'll see you tomorrow. Peace.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's Home to HODL. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine? Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.